simply, there is distress in the market, isn't there? Yes. So how do we get here? How do we get to where we are? Let's talk about the current status and how we got here. And then we're going to talk about how we can get rich from what's going on now. Picture this. The financial landscape, once all fun and games, has changed drastically. Massive quantitative easing flooded the market, altering the course of history. That's right, in 2008, something massive happened. Money printing on an unprecedented scale. But fast forward to 2018, and we were in the midst of the largest economic expansion in history. Interest rates were historically low, and opportunities seemed boundless. But as we moved into 2018, competition was on the rise. Prices began to increase, and bridge lenders started gaining popularity. Bridge debt, with its advantages, made sense for many investors. It allowed for higher loan-to-value, lower prepayment penalties, and shorter asset holding periods. But here's the catch. It came with floating rate debt. These rates might start low, but they have the potential to rise significantly over time. With a 3-year term and rate cap, it was considered a reasonable risk. Now, here's where it gets exciting. Fast forward to 2020, and COVID-19 stormed the party, injecting $4 trillion into the Fed's balance sheet overnight. What does massive money printing lead to? Inflation. Remember the COVID lockdowns and the unprecedented relief packages? They set the stage for something big. Inflation reached 9.1%, the highest in 40 years. Supply chain disruptions and an energy crisis followed. With prices soaring, the demand for assets was surging. Yet, multifamily and single-family values increased by a staggering 40% from May 2020 to May 2022, a 20% year-over-year growth. In 2023, the housing market faced unprecedented challenges. With a supply constraint and the middle class bearing the brunt of inflation, it was time for the Fed to take action. The Fed didn't hold back. Interest rates, which had been on a downward trend for decades, saw an aggressive increase from 0.5% in 2020 to 5.5% in September 2023. You're not alone if you were taken by surprise. Even the biggest names in finance didn't see this coming. They misled you. But now, the Fed is taking hawkish actions to regain control. Imagine buying a $10 million property with an 80% loan-to-value ratio and an interest rate increase from 3.5% to 6.5%. Your financial security is at risk. This is the turning point. The market is evolving and distressed assets are emerging. For the first time in a decade, you can invest in distressed properties even in strong markets. So what's the way out of this multifamily turmoil? You can't build your way out of it. There's limited new supply. It's time to embrace contrarian investing. Capitalize on the fundamentals of multifamily investments and navigate this change. In the words of Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. The market is shifting, and it's our time to seize the opportunity. Don't miss out on this invaluable masterclass. Secure your future in real estate by registering now.